Hello, everyone. Monday's coming up, and the idea is, what do we do? What do we do next week? Well, one thing we do not do is we don't sit on the sidelines. We want to buy when everybody is selling. Remember this. That's the time to do it. Now, let me show you. Do you know who actually bought in July? Actually sold in July throughout this time? Warren Buffett. He was selling when everybody was buying. That is what you want to do. You want to buy when everybody is selling. Hi, this is a smart investor over here. Spent a couple of years making some money in real estate, in investments, and a bunch of other things. Now I do some teaching, and I will tell you that to make money in this market, you need to be first. And you need to be where no one is. And also, you can't really listen to other people. I know it's more complicated, it's more difficult, right? It's more difficult. And that's what you need to do. Okay? I am not selling you anything. I'm here to explain to you what's going on. So, right now, the economy is slowing down. That's okay. We're not going to recession. First of all, officially, only the government can tell you in a recession. There's an office in the government whose responsibility it is to tell you this is a recession. And historically, they have told you that you're in a recession after the fact. I did a video, I think a year and a half ago on that. It's after the fact that they will tell you in a recession. So if somebody tells you we're in a recession, don't listen to them. First thing, there's a couple of quarters of decline. That is when you decide that you have a recession. So that's not going to happen. We are officially not in a recession. First of all, it's not even a recession. We are slowing down. Okay, we still have some positive GDP here, some GDP growth. So let's not get carried away. Okay. Second thing is the mood of the market is changing. The mood of the market is changing. What does that mean? Well, we're expecting to see some decrease in rates, and then you say, oh my god, yeah, we were decreasing rates, but we have recession, so that's bad. Okay, that's going to come down, everybody's going to relax, and then they're going to be looking forward to the decrease in rates, which you're going to get, and then that's going to push the market. Why? Well, because these companies, some of the companies have been totally overlooked. Case in point, we're going to take a look today at a company called Vulcan Materials, because what you need right now, you need to take a look at companies. Okay, yeah, there's Tesla and then the other guys and NVIDIA. Yeah, but it's overbought at this point. Maybe you play with the options. We'll make another video on that. But right now, what you want to do is you want to get involved in companies that are small, that no one has really paid attention to. That's potential for some interesting growth, that is making money, that has not too much debt, and also that is dealing in a product that can control or dictate the value of the asset in case there is inflation, because we're going to need to live with inflation for a while. I hate to say it. That's able to manage inflation and do it. So what are we talking about? Let us take a look. Let us take a look at Vulcan Material. Okay, we're going to take a look at Vulcan Material, and this is. Let me show you the summary for Vulcan Material. Okay, so if you look at the past year, the company is up 18.92%. The past 5 days, everybody's taking a hit. It's still up 1.77%. And from the last 1 day, it is down 1.77%. Okay, fine. Everybody got hit. The P ratio is around 38, which is around market. The beta is 0.82, which is below. So it's not as volatile as the other guys, right? And let's look at the financials. Let's see if we're making money as first of all. Well, from a financial standpoint, the company used to make 4.8 billion in revenues, and now it's around 7.7. It's up. Okay. In terms of gross revenue, gross profit. Let's take a look at the EBITDA, which is kind of the equivalent of the cash flow. I went from 1.2 billion to 2.2 billion. I know it's like, oh my God, a bunch of numbers, a bunch of names. Yeah, but you got to know what you're buying. I'm not throwing names at you here, here, here. Buy, buy, buy. I mean, I see that a lot. I mean, I'm not selling anything. I'm here to educate you. So I'm going to educate you about Vulcan Material. Then you decide if it makes sense to you. At least I bring it to your attention. I'm showing you here, look, interesting stuff, right? So cash flow is going up. We are making $2 billion, up from 1.5. No, how much debt do they have? More importantly, how much interest they're paying on the debt? Because if you don't pay interest, you're out. Well, up in terms of interest expense, we have 186 million of interest expense, but we have 1.4, we have 2 billion of cash. So 10 times, they have 10 times the amount of money to pay for interest expense. So I don't care what happened to rates, right? If they go down, it's even better. But they're able to keep up. So high rates is not going to bother these guys, right? Maybe that's why they did well in the past. And they're growing. Okay, and but what do they do? What is Vulcan? Is that some kind of a volcano? No, Vulcan basically, if you take a look at the profile, essentially the company, together with its subsidiary, produces and supply construction aggregates primarily in the United States. It operates through 4 segments: aggregates, asphalt, concrete, and calcium. So they basically a building material. The company provides crushed stones, sand, gravel, sand, and other aggregates. So it's strong stuff. It's done for highway, street, public works, not just, it was founded in 1909. So the company seems to be doing a lot of things, okay? So let us take a look. Let us take a look at its annual report. So the annual report of the company, let's go to the, let's take a look at the annual report because it's very nice. It's very colorful. I like it a lot. Some recent news first. Earnings expected to grow. What to know ahead of next week's release. Is Vulcan Materials company potentially undervalued? Interesting discussion here. Today we're going to take a look at the well-established Vulcan. The company stock received a lot of attention over the past few months, increasing to 272 from 242. Potential buy at lower price. A question to answer is Vulcan Material trading at a price of 262 reflective of the actual value? Is it still cheap? Can we expect growth in Vulcan? What does this mean to you? Are you a shareholder? Okay, what I need to take a look at. The annual report. Let's take a look at the annual report. Okay, here we go. Build on essentials. Strong foundation. Vulcan Material is a nation largest producer of construction aggregates, primarily crushed stone, sand, and gravel, and a major producer of aggregate-based construction material, including asphalt. We know what you use asphalt for, right? And our coast-to-coast footprint, network aligned with the Server Nation Growth Center. So what do we do? Well, take a look at this. Construction materials, product sales, product and services, suppliers. They do a lot of stuff. What we want to do, let's go to investor relation. Let's go to why invest, right? Why invest in this company? Our company, look. Largest and most aggregate-focused construction material company in the U.S. This is a top company, 6 years of experience, coast-to-coast footprints. Value, industry leader in a unique focus on aggregate, representing 90% of profit. Strong cash flow generation and ability to flex capital spending. Proven ability to compound unit. Strategic discipline. $7.3 billion of revenue, right? Look at the growth of this company. Humongous amount of growth. I mean, it's quite impressive. This company, again, it's not NVIDIA. It's kind of boring, maybe. It's asphalt. But right now, in this environment with value is important, I think you want to focus on that. I think you want to take a look at that. So basically, investor relations, let's take a look at the overview. Corporate overview, latest event, announces second quarter 2020 conference call. And that's what I mean when I'm talking about a small company. I mean, take a look at it. I'm not going to take you through the whole thing. You want to take a look at a company like that. You want to take a company, and by the way, let us take a look, for example, at the, let's take a look at the chart, for example. All right, so it would appear, I mean, this company basically, if you look at the past year, I mean, this company has done great. It was at as low as 194, all the way to 64. It went back up. It went back up. It went back down. But basically, it wants that 264. It wants that 276. And the company has done well in the past year. So, if you believe that the company has strong earnings, which they do, strong business, strong growth, not much leverage, so not too much debt. And you've seen how the stock is behaving. I mean, from November, you could have held that stock in November at 193, and you could have done for 276 from 193, right? Almost 200 to 270, right? That's 70 out of 200. That's almost 50% increase. And I'm talking from November, December, January, February, March, in 6 months. That's almost 100% annualized return. That is a strong stock. This thing wants to move. This thing wants to fly. This Vulcan, this VMC. VMC wants to fly. So now obviously next week is going to be like this, right? I think that these are the kind of stocks that once you see a weakness, then you buy when everybody else is selling. Why would you not? You're going to be in a recession? Well, we still need asphalt to pave the streets. We need to build houses. We need to do a bunch of things. It's concrete. We need to build stuff. This is what I mean by value creation. Now, the point is, how much is it really worth, right? How much is a stock worth? That's the question. Now, the P/E ratio is in line with the market. But I don't believe too much in the P/E ratio, quite frankly. What I believe in the EBITDA. And the EBITDA is 1,966, $1.9 billion. That's a lot, right? So how do I derive some value? Well, technically speaking, if you take the market capitalization, if I take a look at the market capitalization right here, which is about 35 billion, right? If I take the 35 billion, and if I take the if I take the EBITDA, which is 1.9 billion, and I do a simple calculation of 1.9 divided by 35, that gives me about 5.4%. And 5.4%, let me give you another example. So 5.4%, right? That seems like, that's basically kind of the close to the discount rate. You want to know, for example, what NVIDIA is. So if I take NVIDIA, let's take a look at NVIDIA. NVIDIA has a market cap of 2,600 million. $2,600 billion. And in terms of EBITDA, 2,600, how much was the EBITDA? 35. So it's 35 divided by 2,600. That's 1.3. 1.3%. 1.3 versus 5. That's how the rate is way below the risk-free rate technically. So that 1.3 is very tight. This is very wide. So we got more room to go. Even if you just do half of that in terms of valuation, we're still pretty good considering the NVIDIA. So the name is not overly valued based on my calculation. So, and that's what you need to look for. You need to look for stocks. There's going to be a lot of volatility, but you want to focus on the stocks that are going to help you. You want to focus on the stocks that are going to do well. You want to focus on the stocks that have more to go and that have value and that are safe. See you next week to see what happens.